Hey, yo, yeah, you, what's up? How's it going? Good morning. Welcome to Pre-Market Prep. Spencer Israel. I have Joel here. I have Dennis here. You all know what the story of the day is. You don't need me to tell you. It is those three letters CPI. We're going to get the March CPI reading in about a half hour, actually, a half hour from right about now. The question is, was inflation, according to the Bureau of Labor Statistics, was inflation above or below the consensus 8.4% estimate? That's what we'll find out. We will obviously talk overall market today. We'll talk about yesterday's pretty. I don't want to call it significant, but it was a pretty solid sell off there into the close that we are bouncing here in the overnight session. So we'll talk overall market. We'll talk some individual stocks that have ratings to discuss, some interesting ratings today. But of course, CPI is the theme of the day. It is your number one story. So let's get the show on the road. Blu Putnam is today's guest. Very excited. We always have Blu on when there's always big macro news. We had Blu on the day after the last FOMC meeting. We're gonna have Blu on at 8:35 minutes after the CPI report to break down the number for us. He's a chief economist at the CME group. So looking forward to that. Here we go. Smash that like button. Let's get started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Mr. Elconin, good morning.
Good morning. Good morning. I got to have that Spencer enthusiasm. I love to see it, Spencer. We're up 4.25. Let's call it 4 at 44.13. Big sell-off yesterday. Well off the pre-market low, and we've just been kind of inching up, making new pre-market highs. We know there's not much resistance on the upside the way we whooshed down yesterday. Crude, that's bouncing too. That's up 421 at 98.50. Ooh, boy, look at this. How often do you see that many highs in the same area in crude? That is really an eye catcher here. Let's see. Let's call it 98.60. That's your big number trading right there right now. Gold is in the green too. That formed a nice base. That's up $13 at 1961.20. Silver's up 19 cents at 25.18. Bitcoin doing the 40,000K little strangle there, up 430 at 40,385. And Ethereum futures, they're up $32.50 at 3037.50. Dennis, are you white? Where is Dennis?
He is right there.
He didn't let me in. I'm sitting here, but he didn't let me in yet. Spencer controls
Are
everything.
you white knuckled for the CPI number?
Pretty much. Yeah.
As white,
Very, very white knuckles.
as white as his shirt.
I was going to say
White
that
shirt.
too.
Look at
Yes,
this.
yes.
Not even a
So-
beer shirt. Got all dressed up.
What is that? Is that just a regular old
It's
T-shirt?
even buttons. It's even got buttons.
Oh,
on
it's
it.
got buttons. Wow.
Oh, I'm all
Walmart
fancy
must
today.
have had
I
a
got
sale
dressed
on.
up for the CPI.
Yeah. All right.
Dressed
So,
up the number.
Yeah, so this
What
is
do
how
you think?
This is how you know it's going to be a doozy, right? Is because even the White House is out trying to get ahead of this thing. Because Jen Psaki yesterday said it's going to be an extraordinarily elevated report. So you know they're bracing for it.
So what's the estimate?
8.4% on a year-over-year basis, 1.1% on a month-over-month basis. The 8.4% number would be the highest since 1981. I do want to actually show
And
this.
that's their cooked number, which obviously I've tweeted out before, and Peter Schiff's done a nice job of outlining how many things are fake in there. And when Peter Schiff did it, it's actually running at 16%. But we'll take their cooked number at 8% and say that that's even high. So even if it was real and not cooked, it'd still be high. So inflation's just out of hand.
Perhaps. And Boris in the chat says inflation, when expectations are high, it becomes a self-fulfilling prophecy. Yeah, to some extent, that's part of the that's part of why inflation and deflation are so bad, is because they become self-fulfilling prophecies to some extent, and that's what makes them worse.
The other thing
Yeah.
that's even a little bit more concerning is the disparity between the CPI and where rates are. So, like in '81, right? Whatever the CPI was 8, at least rates were what 3, 4, 5%, right? Now there's such a huge disparity. I mean, so many standard deviations away. It's gonna be very hard to come in. So to
It's
me,
the
that's
reason
yeah,
too,
a little
like
more concerning.
this is the reason that it's tough to just go to cash. It's tough to just sit your assets in cash when you're losing that much to inflation. You've got to go into something. You go into bonds. I mean, we have not talked much about the bond market
Oh,
this year, but it is an epic disaster. And I mean, this was predictable too, because you're sitting there and a lot of a lot of bonds yielding 1, 2, 3%. I mean, we're in an inflationary environment. Who the hell wants to invest their money? Even some corporate bonds, 4 or 5%. I mean, you're just guaranteed losing to inflation. So it wasn't rocket science to say the bonds were going to have a very bad year. We've said on this show the TLT absolutely, has been hammered since we've been talking bearish about this for a long time on this show. But this year it's happened. The bigger question is, and the interesting thing is, the banks really have not
I
responded
know.
well to what you would think when you're going to a rising interest rate environment. The banks would be the place to hide, and it hasn't been the place to hide either. And that's recession concerns, because we know the banks will get hit big time if we do fall into a recession. So the bank stocks are telling us that the Fed is going to have a very difficult time navigating a soft landing. But lots to be determined. We're going to get more information in 23 minutes about this CPI. You can very much expect big movement in the banks, big movement in growth tech, big movement in the overall market, and I expect a chop fest.
Well, the other thing too, and this is where you got to listen to pre-market prep and throw out the textbooks, because, well, not that we have the answer, but like, look at this moving utilities. You know, I mean, that is just. I mean, it's still going, just forming a little bit of top, but that's just hungry for yield, right? Any kind of, and the utilities
It
are
doesn't make
some
any
of them.
sense at all.
I know.
It's not even hunger for yield. It's hunger for safety, Joel. There's no yield
See,
in that. The XLU is 2.65%. It's the absolutely dumbest place to be, in my opinion, longer term. But it's saying that this stock market is in trouble, and I want at least to know that I'm safe. My money is safe. Your money is safe in utilities, but meaning these companies aren't going bankrupt. These companies aren't going to suffer. But you're not getting great yield in a rising interest rate environment. The theory, and this is why I've sold all my utility stocks and sold them early, because I sold them over a month ago. The theory is that in a rising interest rate environment, anything that's like a bond, which the utility stocks are, a bond should be getting hit. But it hasn't happened because you've got equity, you have institutional money managers that got to be invested in stocks, and they're nervous, and they're hiding in consumer staples, and they're hiding in utilities, and they're hiding in the stuff. It's a very crowded trade. I'm concerned. I would not be hiding in this stuff, but I mean, it's worked. It's been working. I just think it eventually is not going to work.
I mean, yeah, you're getting hit on the whatever the yield is, but look at something like Duke Energy. That's up over 10% on the year.
They're
I
hiding.
mean,
This is
yeah.
the I'm scared of stocks trade, but I have to be in stocks.
Yeah.
So at least I'm in something. That's all this is. This is it would be the opposite effect. Really, I've always said TLT utilities are kind of linked. TLT has been going straight down. Utilities have not. That has broken apart. And that's the simple reason, is that people want to be in stocks, but they want to be in safety stocks right now. That's why growth hasn't participated in stuff like this, and they think utilities, consumer staples, I'm going to be okay there. Walmart makes sense to me. Target makes sense to me. The Costco makes sense to me. The utilities does not. But I mean, I've been wrong on this trade because utility stocks continue to rise over the last month. I did not see that happening.
And I have to do a better job of actually bookmarking stuff or saving stuff when I see it, because I see some good stuff every day, and it goes off into the ether and I lose it. But I believe it on Twitter yesterday, someone that I follow was tweeting about utility stocks, and never It's never happened before where the amount of utility stocks it was either like above their 50-day or making new 52-week highs, or it was like almost every utility stock out there was making new 52-week highs, or I forget the actual metric, whether it was above the 50-day moving average or what. But the point was the entire sector is ripping, and it's never been this way before. It's never been as strong as it is right now.
Very crowded.
Yeah.
It's fear. It's fear of
Oh, I
other
found
stocks.
it. I found it. Okay. More than half of utility stocks have hit a 52-week high, have hit a 52-week high on an average day over the past 10 days. It's never happened before, at least since 1952. This is from Jason Gofert on Twitter. So
Is there news on AT&T?
No, it's a huge buy imbalance, Joel. I'll tell you the news.
Ooh.
This stands out like a sore thumb. On a day that there's no imbalances, over
Really?
$1 million to buy.
Wow.
There's over $1 million to buy here this morning. Good call on your part here, Joel. I didn't see that rally continuing this morning, and it did. And it is continuing here, and it is breaking out. And
Oh, I
guess-
hate this chart here. I hate that TradeStation hasn't adjusted this yet. That's
yeah,
bugging me.
it's a breakout on the chart. Like I'm looking
I
at an
know.
adjusted chart, and it is broken out from the 18 level, and it's 19 and 20. It's 1 million shares. It doesn't make sense to me either. I've been having bearish the stock for a long time, so I'm just not getting. This is my long-term thesis in it. Short-term, who the hell knows? But long-term, I just don't like the company. But we had this conversation yesterday. But the reason AT&T is ripping this morning, people will go and find a fundamental reason. There's 1 million shares to buy right now, and that 1 million shares is the opening imbalance.
That's huge. That will get offset.
Well, not necessarily at this time of day. At 8 o'clock in the morning, usually the imbalances are nothing. When they're showing a mill to go, I mean, you can say, oh, it's already traded 787,000 shares. What's 1 million on AT&T? But it's something. And at this time of day, that, I was actually short. So I'll put it this perspective. I was shorted overnight. I saw that imbalance pop up at 8 o'clock, and I covered it immediately.
Yeah.
Because it was like, oh, that's going to push the price. And I
covered
the
record date's coming
It's up at 20 now.
Well, the X date is tomorrow.
Yeah.
So.
Well, there you go too.
Yeah.
I forgot all about that.
Are you sure? Are you sure? Or I
can check. I
think
right now.
That's really I dropped the ball on that because Verizon went. You're right because I had it written down. I forgot.
Yeah,
it's ex dividend tomorrow.
413. Yeah, the record.
We talk about this trade.
We
talk about this trade all the time. That ex dividend stocks, that the AT&T and Verizon, when they go ex dividend, they're strong to the ex dividend date and week afterwards. That is very typical of these stocks. So I'm not actually. It doesn't surprise me now that it's showing strength here for the next couple of days. The textbook, which we've talked and we've given lectures on, that's always my examples. AT&T, the stock that is strong ahead of its ex-dividend date and week after. So it's tomorrow the ex-dividend date.
Tomorrow is the ex-div date.
Yeah. So
what?
You'll probably see relative weakness starting tomorrow.
It just got muddled, with the spin-off, right? And everything. It was confusing yesterday, and so I just think people are very confused, and they're still. I mean, because the yield is down. Yeah, very confusing. I don't know. I just kind of been sticking with it. I don't know why. I've just kind of been nibbling at it more. So finally it's hard to believe it's back over 20. But did you see the bottom Verizon put in a couple weeks ago? Did you see this?
We talked about this on the show.
Jeez.
We pointed this out. It was crazy, and you even drew the line, I think, or maybe you didn't.
Yeah.
But look at that bottom.
I didn't need a line for that.
50-81, 50-81, 50-80, 50-80, 50-81. I mean, right under 50. Boom, boom, boom. I mean, that's a hard bottom. You can play it long until it breaches it. It did not breach it, and now it's bouncing up against it. Verizon is ex-dividend now, so that's one thing to consider. But, I mean, it's had a nice little bounce off of that, and people are like, oh, what's $2? I mean, on Verizon, it's a safety stock. You get $2 in a couple of, in a week. That's a damn good trade on Verizon.
Yeah, and that's just like going back to the Verizon chart. That's just like one institution, two institutions, five. They're just saying, I'm just buying here. Like whatever you could throw at me, I'm buying. And then it kind of, then the algos kind of pick up on it. It was the same place at bottom. Look at that, late January. So now it's a little, now it's had a big rally. But if Comcast. I mean, good old Comcast. Yeah, I still stick with them. That's on the verge of a breakout here. Look at 48 and a quarter.
All
Or
of these
see,
stocks are the
yeah,
same thing, though. They're all a little more conservative. Like in an environment that's a little bit scared of, like, PEs of 100, these
it's the
stocks aren't
opposite.
that. These are value stocks. Are they value traps? That's still to be determined. I don't, short term, these might be good trades because the market is still hiding. But long term, a lot of these stocks that we've been mentioning this morning, I mean, the company, I don't, it's under attack. Disruptive technology is no doubt attacking Comcast, no doubt attacking AT&T. So I'm not putting these in my long-term portfolio
Nope.
for a 2.26% dividend. But are they trades? Joel, you make a good point. These look like Comcast look like it's getting ready to break out.
All right, Spencer, rain is in.
Do you want to quickly, because we mentioned it, do you want me to just mention some other stocks going ex-div tomorrow?
Sure.
Aside from AT&T,
Let's see what the charts look
Foot
like.
Locker goes ex-div tomorrow.
Is that a big dividend?
5.47. It's sizable, yeah, Joel. It's actually pretty good.
Yeah, so you can see the data yesterday. Accenture, ACN, goes ex-div tomorw.
Can you show this? Show this in the pro.
Sure. I got you.
We try to teach teaching
I
tools
got you,
here.
man. I got you. Let me pull up my handy dandy Benzinga Pro here. Let me actually start from scratch. So this is the Pro homepage. All I did here, I went to the calendars widget right there. It says earnings, right? This is earnings calendar. I don't want earnings though. I want dividends, and I don't want today. I want tomorrow.
Yeah.
Boom.
Hit and filters by X on the left, and then you can just grab. And you know what I do? I go to the Pro, and then I hit the yield, or just hit the dividend button. You can hit yield, but you can hit dividend. You can see which ones go the other way. Now you can see the big ones.
Yeah.
So then you go like, boom, oh, AbbVie's $1.41. That's a nice dividend tomorrow. I own AbbVie long term. Accenture 97 cents. So you can just go through what the big ones, but some of them obviously that you maybe want to capture, maybe want to try to capture. I mean, the AT&T isn't as nice as it used to be. It's only 27 cents now because they've cut it in half, but it used to be a really nice dividend. Yeah, there you go. So I look at that every single day.
Here you see
every single day.
Activision Blizzard's tomorrow. Accenture I mentioned. AbbVie Dennis mentioned. So yeah, if you do dividend capture, this tool is invaluable to you for sure. It's right there in the Pro. It took me 3 clicks to get this information.
And I mean, I've told this story before. I mean, this has been going on for a long time. And when I was market maker at Aetna used to have a huge dividend, and they also had the commission-free trading back in the 90s. And there was this guy or this fund, and he would come in with like huge orders in Aetna. And he would come in, the stock would be down like $1.25 with like 4 minutes to go. And he'd come in with like 10 or 20,000 shares. Like, what am I going to do with that? I can't take the other side of that. I'm not going to go home short 10. And then the next day would come in a little bit lower, and he would like come in late in the day. And I could never ever make money on the trade because he would just keep lowballing it, getting in for the dividend. And then he'd get the dividend, and then, it would go X. And then sometimes, they go X, they come down, and then they rally too. That's rare, but we talk about the adjusted price. But that was one guy, man, or guy, girl, fund, institution, or whatever, that people have been doing that for a long time. It takes some good money.
I've done dividend capture for 20 years. I'm always, but it's different too. And what you got to consider if you're in a retail account, you got to consider all your tax consequences of it all. Like in a prop account, when it's just money, and money's in, money's out, and you're 100% tax and everything, you don't have to think about all that stuff. So, I mean, but dividend capture has been a strategy employed by the pros forever, Joel. You're right. Like to the floor, to everything. And while dividend capture is buying the stock, taking it through the X, you get the dividend, then you try to get out of this trade, losing less than the dividend the next day. That's all it is. And more often than time, like nothing works 100% of the time, but a lot of times it works. It's been a tougher dividend capture environment. Sometimes I've noticed lately like that they are getting hit pretty hard. Maybe it's been crowded or something that, you get a 50-cent dividend, then it opens down 70 cents and you eat 20 cents on it. And it's not like, don't get caught bag holding on this. You can't like make on them all. I literally sell them at the open or, in the pre-market no matter what. So if I'm going after a 50-cent dividend capture, it opens down $1, I eat the 50-cent loss. I don't hold on to it because I know there's going to be relative weakness after. So you don't want to get caught bag holding these things. But a lot of times they open stronger. Sometimes, there's people that don't realize it when ex-dividend, so their orders are holding up
Dennis,
the opening
we have
print.
someone new in the chat. Just explain what the actual XEX, what it will actually do to the price tomorrow.
Yeah, so let's go to an example. Just take AT&T is going ex-dividend tomorrow. I believe the dividend is 27 cents now.
Yeah,
So what happens is if you hold it overnight, you hold it through today. You can't after hours. You got to hold it right into past midnight. Once you go past midnight, now you're entitled to that dividend. So then they'll adjust the closing price by the 27-cent ex-dividend date. But a lot of times people are like, oh, it comes down. 1963 comes down 27 cents. They might buy 1940, 1950. Maybe they just want to get in a little bit cheaper. So that's who you're trying to sell to when you're capturing it. But the whole point of dividend capture is you buy it, you hold it through into the X date, and then you try to get out of it on the X date.
And just for an example, if AT&T, who knows where it's going to close today, but if it closed at 20 and all things equal, the adjusted, because we mention this all the time, the adjusted closing price tomorrow would be 1980. So that's what we mean by that. So
Yeah, don't make the mistake like, oh, if I hold it through the dividend, I get a free dividend. Well,
no,
it's not
The
not
price
free.
theoretically is supposed to adjust down
Right.
by the amount of the dividend, but theoretically, stocks don't trade theoretically. They trade on supply and demand, and a lot of times they don't open down enough. Sometimes they do.
Yep.
Sometimes they open down more than enough, and then other times, it doesn't work out. So it's a law of large numbers. I mean, I'm not picking on one stock or two stocks.
Exactly.
Probably last year did dividend capture on probably an average of 5 to probably 3 or 4 stocks. Some nights I have like 30 of them on if it's a really big dividend day. But probably like, I'm not joking, probably like 1,000 stocks I did last year, like 1,000. And if you go through like 1,000 times, maybe more, it might have even been more than that. Because some days I'm like 20 or 30. Some days I'm none if there's no good ones, but some days I'm a couple. But say 1,000 or 2,000 times. Okay, well, if you got a 52, 53% edge, you're gonna lose on 950 of those and make on 1,050 of them if you did 2,000. So you're gonna make money. But if you just do one or do two or do three, well, you could just have some bad luck and pick the wrong ones. So the bigger you get, the more it works. But what I will tell you in the last month, I can just see from my P&L is dividend capture hasn't been working as well. So I back it off a little bit, and then it'll start working again. It gets crowded. It goes crowded, not crowded. I mean, trades, all strategies do that. They cycle. They get crowded and we're not working because too many people are doing it. Then it backs off. It's like the Kramer, a stock mentioned on Mad Money. So, if he mentions it, sometimes goes up. But it hasn't been doing that at all lately. Those Kramer picks have actually been going down when he's been, featuring them on Mad Money. So, I mean, it's just crowded. So then it'll get uncrowded and then it'll start working again. There's all kinds of different strategies. Nothing works forever.
And I like what Boris said in the chat. No one's getting rich off this trade, but
exactly.
But it
I
can
wanted
be
to
a
say
good
that.
trade. It can be a good trade.
And you need low commissions.
Right.
Yeah, you need low commissions. You need to be able to carry it. You need a big enough account,
All
etc.
that.
And
it's also ideal for prop.
Yeah, and
it's an ideal
also,
prop
like,
strategy.
what's the stock doing? Going into it. Like you could see with AbbVie here after the run, some people were a little bit, like just they're saying, okay, I might take some profit. It really depends on that the character of the stock, what it's doing. Some people are planning this out the whole quarter.
Yeah.
Like they're charting it and they're looking for it. But all right, this is
okay.
25 minutes of dividends.
So quickly, we have CPI in 5, but before we get to that, I do have some breaking news. And stop me if you've heard this before, but I am going off script here for a second. We have a bidder for Kohl's, according to Reuters.
Again,
the franchise group is making a bid for Kohl's. Again, stop me if you've heard this before. They're saying
every time it pulls back as a buy.
That's a $9 billion offer. Be willing to spend $69 per share, per Reuters. You got some smoke here. There's an awful lot of smoke here, but are there any flames? I don't know.
It's the same thing again. I mean, I actually thought about this. I was like, if this gets back to 55, I'm going to buy it. 57, now you get the bid coming again. I mean, every time this thing pulls back, then the rumors start again here. I think eventually somebody does buy it. Kohl's is a cheap stock. I think eventually somebody does buy it. So Every time
Street
it
ain't
goes back
believing it.
mid-50s and people forget about it, it's been a buying opportunity. Lots of chances in this one.
What about that other group that's buying it at 65 and they can't even get it to 65? I mean, these pops have been no one believes this. 59, 95, 60, and they're offering 69. This is who broke who broke that?
But this is the same
Reuters.
thing. It's been
Reuters,
too much.
Reuters?
There's been too many times where a deal hasn't materialized. So once bitten, twice shy, right? Algos are buying off these things, and then it doesn't materialize and starts to leak, and they're losing money. So I think eventually there is going to be a bid here, though. I think eventually it's going to get taken out. It's been too much smoke.
Yeah, that's
what happened to the original group? Why don't they
opinion.
just do the deal at 65? I mean, whatever happened to that?
They're rejecting it, Joel.
They did reject it? Okay.
Joel, why
so.
do a deal at 65 and you can do a deal at 69 or 70?
Right?
We got 4 minutes to the CPI. I gotta
So what I'm gonna do?
What I'm
gonna do for CPI, everyone, is I'm gonna turn on the Benzinga Pro Squawk, and I'm gonna let Charles, because he's the pro of pros. I'm gonna let Charles squawk out the number for you as he gets it, because he usually beats me anyway.
He beats us all.
I'm gonna turn the squawk on. Not yet. I'm gonna do it in like 2 minutes now. And then we'll have Charles squawk the number out. And then then after that we'll digest it. We'll bring Blu Putnam on from CME Group to give us his instant reaction. But yeah, this is gonna be the number of the day. It could change the entire direction of the day. Obviously, we're up this morning for now, but I like what Dennis said earlier about just choppiness.
Oh yeah, expect chop.
Yeah, like Joel. I think back to the release of the minutes last Wednesday, right? Was it Wednesday? I think it was Wednesday. And it was you faded you had to fade the first move, fade the second move, and fade the third move too, because there was 3 reversals.
No doubt.
It was just ridiculous. Very, very difficult here to try to understand what is how the market will react to this. But the number is important. This has superseded, in my view, superseded the jobs number as sort of the most watched economic indicator out there right now. It's not every day inflation gets to a 40-year high. Where we are right now. So as I said, 8.4% is your consensus year-over-year estimate.
I think it's going to be light.
I just got a feeling I don't know, and I'm not trading it. It's just like, what would screw most market participants right now?
Probably if it's light.
A light number.
A rally. I don't know if you're going to get it, but now, you had the big down day yesterday. You're way off the pre-market low. People are like, did I miss the dip? I should have bought yesterday, So now that, that mentality, when you're we're 40 handles off the pre-market low. And there's not much here in resistance here. We'll see. I don't know.
I don't think anyone's crying that they missed the low. Maybe.
I mean, I'm just saying, no, buy the dip, man. I mean, I'm afraid of the CPI number. Whatever. I mean, it's so hard, to gauge things like that. But I got Dennis. I got J.P. Morgan. I got Bank of America. I'm going to throw Wells Fargo. And the growth tack, I'll just go Kathy, right? I mean,
throw Kathy up there.
Yeah, better representation.
She's going to be on CNBC after 4:00. We got to that interview. Yeah, they got the big Kathy Wood on there after 4.
All right, you know what? It's 8:29.
I'm going to be back.
Let's turn on my
hide.
I'm going to turn on my Benzinga Pro Squawk.
Nice.
And we've got that turned on right now. If you have the Pro Squawk turned on your end, maybe turn it off for the next.
Yeah, like in your radio. If you're in your car.
Yeah.
That's whatever I call the radio stations. That's what they do. They're like, turn
you
on.
Do not call you do not call the radio station.
You know I do, Spencer.
Yeah, I know you do.
Yeah, that guy Valente. He's a big Michigan State guy, but he loves the ponies. He loves the ponies. Right. Yeah, loves the ponies. So
all right.
So does Rome. Got a good Jim Rome story for you.
All right.
Okay.
We'll save that for after the number here. So again, 8.4% on the year-over-year, 1.1% on the month-over-month. Those are your consensus.
DUK, Duke Energy's first solar plant in Surrey County, North Carolina, goes online. Delta Uniform Kilo, DUK.
Duke Energy. Charles, we don't care about Duke Energy, right?
Duke is Duke.
We need to know We need to know about inflation. No one.
Oh, it's soft. It's light. It's light.
March
It's light.
Consumer Price Index
Here we go.
It's light.
plus 1.2%.
Okay, month over month. So a little bit higher on the month over month. And the year over year, Charlie?
That's in line with estimate.
Yep.
Yeah.
The core CPI coming in at plus 0.3% versus plus 0.5%
Okay.
expected.
Core's light.
Yep.
Core's light. Interesting. Yeah. The year over year number 8.5%. So more or less in line. More or less in line. Huh.
Yep.
8.5% on the year over year print. What do you say? 1.2% on the month over month print.
LAX shares resume trading now.
Right, I'm going to turn that off.
All right. There you go. What inflicts the most pain on people?
That's you
A
said
rally.
You said it.
Exactly. There you go. Up 29 handles, way off the pre-market low here. But you saw it move. I mean, you saw the 1 minute chart here. The high's 38.75. Now I'm looking at the stocks here, and the banks are crickets, right? This is not great for banks. I don't see let's look at JP Morgan here. I guess for your bank participants, you wanted to see a hot number. Not really a hot number. Let me go to the pre-market chart. And these things just can't catch a bid here. Wow, no trading in let's go Bank of America. That's a little bit more active here. No, man, they're just went down just a little bit. These banks. I mean, the only reason they would go up, like the J.P. Morgan and stuff, would be because they're a component of the index, right? And the indexers kind of have to scoop it up. We talked about what's Kathy doing. This is good. This is good. This is a light number. So Kathy got a pop, got to 61. Can't look at that within yesterday's range. Not really backing off. We just hit 38.75. There's nothing in here, folks. There's nothing, and everyone knows where the resistance is on the upside. What else? Now JP Morgan's down. Yeah, they don't like that. Give me some other growth stocks, Spencer. Who do we like? We did Kathy.
For growth, I use Kathy and I use Square and I use crypto as like my big proxies right now. So and I Tesla is also. And by the way, I wouldn't call this a light number. I mean, 8.5%. We're still at a 40-year high. Just to put things in perspective here,
but everyone was like, "Oh, it's going to be 11.2." And who's
You're
that?
Right. You're right.
And
you're
who's
right.
this girl from the White House? Like, what is she doing?
Joel, she's the White House press secretary. Come on.
She just threw us a curveball. I'm going to fade her next time. Oh, you'd be ready for a bad number. She probably doesn't even know what she's talking about.
The number was more or less in line.
In line.
Right. But it's still a big number. Let's be honest. 8.5%. Even if you do believe the number is 100% true, 8.5% is still a 40-year high. This chart on the screen shows what I'm talking about. Look, we haven't been this high since 81. Okay? So yes, was it in line? Yeah. Is 8% better than 10%? Yeah.
We're ripping. Look at this. This is a rip your face off rally. We're coming back to the low from last. Oh, right here. I didn't even think to say we're going to go to 44.45. That's the number, man. That is the number from last week. If I had not been a chicken and bought this thing, I'd be looking for that. 44.45. I'd be calling it a day. That was a double bottom from last week. We'll see what happens. We just ticked 44. Buyers are still strong. JP Morgan in the red, 43 cents. Bank America, Kathy strong, up $1.64.
Everything growth from Skills to Airbnb to Kathy, crypto, semis, right? Everything just sort of everything growth ripping here in the last couple of minutes. Across Twilio, right? Everything
Twilio, good.
Everything growth moving here. Just off this report, moving to the upside, I should say.
What about your shop?
How was my shop? Yeah, shop.
You're killing it, Spencer. Spencer buys it. it splits the stock, and then all of a sudden growth is back in vogue.
All of a sudden, what are you going to do? Let's get a professional economist's take on this. Blu Putnam, the chief economist at the CME Group. I'm sure he has thoughts. We've given him a whopping 5 minutes to digest this information, so I'm expecting only the most refined takes from Blu, as always. Let's bring him on right now. Mr. Putnam, how are we doing today?
We're doing very well, thank you.
Blu, did you get to pick that song out? You know, like the basketball players and all the
No,
superstars?
I did not get to pick it.
If you picked a song, what would it be?
Uh-oh, I wasn't ready for that question. I'll get back to you.
All right.
Okay.
Blu,
right.
Blu, what is your initial take here on the headline number?
Well, it's comforting for the number to come in pretty much what we thought. 1/10 either way makes absolutely no difference. Economists aren't remotely that good.
Yep.
But there were plenty of people worried about a much larger number, and so there's some comfort that did not happen. So we're kind of settling into a pattern here. We're starting to understand it. That's giving the market some confidence.
I don't think going into today's report, anybody was saying that this is going to be the peak. Is that right?
No, there were a couple of people that, well, they hedged their bets, but they're saying that this or the next month or, sometime soon. And then they say, well, it'll be lower in the second half. We're a little fuzzy on the exact peak, but they think it's close.
Right. Okay. So, the economists mostly got it right. The number was not as bad as some were expecting. What's the next play here? Because of course, what we're really talking about is not so much how bad inflation is, but how the Fed will react to how bad inflation is. So, what's the next play here from the Fed?
Well, this is something the Fed has learned to work with. So, they've told us they're going to raise rates a lot, several times this year. They've provided some forward guidance that maybe they'll do 50 basis points at the next meeting. That's May 4th. They've already, in the minutes that we got from the last meeting, they told us they're going to shrink their balance sheet at $1 trillion a year. By the way, that's quite a lot. So we have seen a pretty big move in the 10-year Treasury note yield, which, by the way, on this number backed off a little. It was about 2.77 yield before the number, and it's like 271 or 272. So not a big move or anything, but we have had big moves in the 10-year over the last 3 or 4 months as the Feds signal the shrinkage of the balance sheet. But the Feds, this is what they've told us they're going to do about it. They're going to raise rates and shrink the balance sheet.
So the important thing here is this number, in your view, doesn't actually change anything.
It changes absolutely nothing. And then that's the thing that's important, is that it does give you more confidence that you kind of understood what's happening now. That's where surprises keep you, on edge for every future number.
Yep.
But your point, Spencer, that we're at a very elevated number. We're where we were back in, the early 1980, 81, 82. This is really this is a pretty serious situation.
Yep.
At the same time, we have a very robust labor market. We're creating a lot of jobs. There's still a lot, there's tremendous number. I think 11 million job openings, more job openings than unemployed. I mean, we're in a very good place on the job market, and some of the signs on inflation for the second half of the year starting to look slightly more positive.
So you're not you're running into the recession camp then. I mean, we're looking at these banks, and these banks are just screaming recession at us with not, just where they're at, not reacting to this positive. So because I do the eyeball test. I look around. I mean, I don't know. Am I missing something? I mean, what about everyone's so afraid of them raising too fast in the recession? So you're going to put that off the table for a little bit longer, huh?
Well, I don't worry much about how fast they raise, particularly when they're telegraphing it so clearly. What I worry about and what I think about is, where's the peak rate? Where are they going? And again, the Fed's been relatively clear that they would like to get to something like a neutral policy and take a break and see where we are. Okay, so what's neutral? We don't exactly know, but if you look at the federal funds futures market, it's telling you that the Fed would like to get to about 3%, the 3 to 3.25, and then we'll take a break. And again, the Fed funds futures market, which by the way can be quite wrong, but it's telling you what the market's thinking today.
Yep.
Is that we get to that by summer of next year, so pretty fast actually.
I'm holding on to what you just said before, which is that the fact that the number was in line with estimates gives us confidence that we know what's going on, because the only thing worse than what would make things worse is not knowing what's going on, right? Not having any confidence in the predictions and the estimates or in the numbers themselves, for that matter. So this gives you confidence that we do have a grip on what is happening here, which I think means a lot. So I'm going to hold on to that thought here.
It's not a tight grip, though. We just have a grip.
Okay. All right. I'm trying to be positive here.
But, we know that rents are rising, so the core rate's going to pick up a little bit. We know that companies are starting to make a little progress on producing more goods. We know that gasoline prices at the pump have dropped just a teeny little bit. So we're feeling like we're getting a handle on this. So it's a loose grip.
Speaking of gasoline prices, no surprise to see gasoline as the leading cause of inflation. On a year-over-year basis, gasoline prices up 48%, used car prices up 35%, gas utilities up 21%, meat, fish, and eggs up 13% year-over-year. New cars up 12.5%. So again, these are all things that we know, we've experienced in our day-to-day lives. Not a real surprise there. But as you mentioned, Blue, the month-over-month change does paint a little bit of a better picture on some of those numbers, which is good. I do want to share this chart that you were you actually sent us a few charts, but this one in particular I thought was interesting. This is the U.S. Core inflation compared to the Fed's target rate. Now, I had thought that they had thrown out the 2% target rate indefinitely.
I don't think so.
Okay.
They have changed how they interpret it. Last year they were thinking, well, it's an average rate over a period of time. Anytime you talk about averages, that allows you to overshoot a little bit. But they weren't, they weren't thinking about overshooting this much. We're clearly in a different place, and of course, that's why the Federal Reserve has, told us they've started their tightening. They're going to raise rates some more. They're going to shrink the balance sheet. So this is what's driving it.
Yeah.
Blue, I got a question for you. These fat heads, they come out and say things like Brainerd. We got Brainerd the other day, and who's the guy that always comes out super hawkish? Do you have one that you is it all just hogwash to you, or do you pay any attention to them, or I know you do your homework and everything. What about these fat heads running off at the mouth all the time? Any comments on that, and any favorites?
Well, there's 17 people on the FOMC when it's totally filled up. And even though only some of the regional bank presidents get to vote at any one time, they're all in the meeting. They all get a chance to talk. It's a very consensus organization. So I do not listen to any one person except Jay Powell, because he speaks for the consensus. But I do listen to all of them to just kind of get what's the average? Are there any outliers? What are they? But for me, it's also more about understanding what are the issues they're debating in those meetings. Because if you do have one or two people that are outliers, they're going to tilt the conversation a little bit and force that debate. But again, it's a pretty big committee. And of course, they have their staff in the room most of the time. So it's a consensus that emerges.
There's another chart that you were kind enough to share that I want to bring up right now. Just it outlines the Taylor rule. First, can you explain what the Taylor rule is for people that are unfamiliar?
Well, back in 1993, Professor John Taylor wrote a paper in which he said that, if you want to look at what the Fed might do, you should think about what they're supposed to do. And they're supposed to encourage full employment and price stability. So he developed a very simple rule that when the inflation rate is above the Fed's target, you give that 50% weight. And when the unemployment rate is below what you think kind of the longer run, what they call NAREIT, it's the non-inflation employment rate. When the unemployment rate gets much lower than that, then gets another 50% weight on raising rates. So it's a trade-off between inflation and unemployment. When unemployment is well below typical, which it is now, and when inflation is well above target, which it is now, both of them are signaling higher rates according to the Taylor rule. The Fed does not follow the Taylor rule. The Fed is data dependent. The Fed makes a committee decision, and the Fed doesn't follow any simple rule, but it does look at things like the Taylor rule, as many of us do. It's a very important indicator.
Blue, what about the disparity between like when inflation was this high before, back in the 80s? At least you had a corresponding, interest rate. Let's say it was 4%, and 8%. Now, I mean, what do you make of the disparity now? With rates at just a couple points and inflation up at 10 and 12. Do you think, is there going to be a meeting in the middle here, or inflation coming down, rocket rates? What do you make about that disparity? Something we've never seen before.
Well, long-term inflation expectations are very sluggish to adjust to any surprises or new information. So in the 1980s, we were coming off 10, 12% inflation, and very few people thought it would come down as fast as it did. So the inflation expectations tended to linger well above what we were seeing in the data. And they didn't really catch up with each other till around the mid-90s. Inflation, kind of stabilized in the 3% territory, 2 to 3%. And you got people finally saying, okay, that's where we're going to be for a while. So the 80s it took a decade to get inflation expectations down from where they were. So that's we're seeing that now in reverse. We have higher inflation, but the inflation expectations, if I can use the language of the Federal Reserve, are still fairly well anchored at a low level, because people say, wait a minute, we've just had 3 or 4 months, a year's worth of data. There's lots going on in supply chains. I'm going to wait and see. So, that's probably pretty smart.
Okay, Blue, before we let you go, I got one more thing for you to contemplate over the week, okay? Because they didn't consult me on the song, okay? I'm going to give you 3 choices. Blue Suede Shoes by Elvis Presley, Blue Collar Man by Styx, or Song Song Blue by Neil Diamond.
I'm going with Elvis Presley.
Okay, all right. Roll. Okay, I'll get Mitch on that.
Wait a minute.
All right, wait.
I have my blue suede shoes on.
Oh!
Wait, Blue, before we actually let you go, though, what is the next number on your radar here, or next data point?
The next data point that's really important is the employment data. Okay. We will get the PCE core inflation data at the end of the month, but we now kind of know what it's going to look like, so we're not worried about that. Okay. But every month's employment data remains absolutely critical, and that's what the Taylor rule tells you. You got to watch inflation and unemployment during these kind of periods.
Got it. Blu Putnam is a managing director and the chief economist at the CME Group. If you want to get more of Blu's insights, read more, see more from Blu, there's a link that is in the chat and on the screen and in the description. You can even scan that. See that QR code in the bottom right? Just scan that QR code. That will take you to Blu's homepage on the CME website. and where his insights live. Blu, it is always a pleasure to chat with you. We will have you back on in the near future, the next time we have a big economic event to help.
Let me slip one more thing in. I don't know if I asked you this before, Blue. Is Leo Malamed still around?
He certainly is. In fact, Leo will be in town on May 16th for the CME MSRI, Mathematical Science Research
Could you see
Institute
if
Prize.
I've emailed him. I've emailed him. He hasn't responded. I'd love to get him on the show. He's the father of financial futures. Could you use some of your pull there at the Merc? See if you can get him on.
My pull. You're not going to get too far, but
okay. All right.
Leo's
Thanks,
doing
Blue.
quite well.
Thanks a lot, Blue. Always a pleasure.
All right, we are still ripping here. I hope Triple D is. Oh, there he is.
Yeah,
How you doing?
I was listening in the background, doing a little bit.
Are you doing okay?
Straight up, chop was not there. There was no chop. This just lifted. So punish the maximum amount of participants were the people who were expecting chop. Like you sell that initial rip and it's like, hey, it's going to come down. Oh, no, it's not. It's going to keep going. Yeah, so we're in this market environment where we're not choppy for whatever reason. I thought it would chop around, but they're just running everything. And I mean, everything living in harmony here, Joel. I mean, we got growth up, we got banks up. Hell, even some of the utility stocks are going up a little bit here, which you would think that they would go down on this. But, I mean, this is an everything rally. Obviously, high growth is, with a number not being worse than expected. The growth names are the ones that are really ripping. So think your Cathie Wood stocks. ARKK is up 3.5% here this morning. Just go through all those names like the Teladocs and the Zooms, and even the mega caps. It's literally NASDAQ is leading the charge, but there's a lot of value names that are participating, which is interesting in itself as well. So it's an everything rally this morning because the number was not as hot as a lot of people thought it might be.
This chart to me is the real story here. It's nothing to do with markets, but it's from Charlie Bilello, who's a great follow on Twitter.
He is.
Wage growth has been rising, but has not been rising to keep up with inflation now for 12 months in a row. That, to me, is the story. Because if prices are rising, but wages are rising more, then that obviously minimizes the effect of inflation. But when wages aren't keeping pace, and they are not, that is how you get true economic destruction. That is what's happened for 12 months in a row. So shout out to Charlie Bilello with this great chart here. And that to me is that's the real story here, right? Is that
you know what else is rallying here? You talk about everyone. Look at gold rallying.
Which is interesting too. The commodities are trading up. I mean, it is truly an everything rally here. I'm looking across my screen and I'm struggling, and I mean struggling big time to find stocks that are trading down.
But we had news on Cisco.
Oh yeah, but you can't. You can't just go say, "Oh, it's downgrade to sell." That stock's trading down. I mean, obviously, you're not minimizing a downgrade to sell. But if you're just taking a stock's absence of news, I mean, you got airlines up. On a day that oil is ripping, the airlines are all ripping too because of this number. So I mean, and the number wasn't even like this was like, oh, inflation is gone. It's just like it wasn't as bad as some people feared. Silver lining.
It wasn't through the roof.
Yeah, silver lining market again. I mean, holy. But I don't know. Do you come in and fade it here? Get your head ripped off? I think anything near SPY 450 is a sell. So you're halfway there, and I don't think you're getting there today, but this market's stupid, and who the hell knows? But I would initiate shorts if we got up near the SPY 450 area.
Well, we're over last week's low, number one. And then number two, I put this number on my sheet. I never thought we would get there. But, your Sunday night high was your Sunday night high, right? I mean, that was 8 points over the close. But your intraday high from yesterday, right? We're right here right now. 59.50 was your intraday high. We had a 90-point sell-off, and we're right back at the intraday high from yesterday. I mean, I've looked at some potential areas to short here, but I don't know. We'll see what happens. It's a reset. It's like yesterday never happened. We're right back at the intraday high.
It's the market of short-termism. The algos are all short-term. Everybody is short-term. They're not looking out. This market, I've said it before, it doesn't price out 6 months. It doesn't price out 6 days. It prices what's right in front of it. It's just very, it's very short-term. It's as short-term as a market. It's been that way for a long time. Today, we had a lot of expectations that this number was going to be really, really hot. And it's not that hot. It's hot, like compared to where we were, but from where the expectations were, there were people that were saying this was going to be really bad.
The only reason I thought it was going to be hot was because the White House said so. And
well, I
assumed the White House.
And it is hot. You put it in perspective. This is a hot number. From where we were, here we are, we're praising 8% inflation.
I know.
I mean, what have we come to?
What does it come to? What
have we come to? But regardless, you can't argue with the price action here. It's not even like I see leakage happening. I just see nonstop buying for 25 minutes straight. So every short is getting squeezed once again. Don't think this market's been easy on the shorts. It has not been easy. You're coming here thinking, I'm going to short, make some money. You're getting your ass handed to you today. So, I mean, this is a tough market to trade and a tough market to predict. But just remember, it's very short-term thinking. So if you're sitting there and you were like looking at your portfolio yesterday and throwing up, this is an opportunity to lighten up. If you were sitting there yesterday and you have too much cash, then I'm not chasing. Again, name of the game is buy the dip, not buy the rip. If you're buying stocks, you need to be doing yesterday, not on a 50-point rip on a number that isn't even, But are we going to have the chance to continue here? It's a short-term market. Is there more information coming out today on economic data? Probably not. So right now the market's thinking, it's not that bad. We can take this 8% inflation.
Yeah, some fathead will come out and say something or whatever, and that. But you're just in an area, a very thin area here. I mean, you've already exceeded your average daily range, and there's just not much up here. That's what else can I say? I mean, we just floated up. We talked about punishing market participants, and
this one punishes the most.
Yep, this one
You're
does.
Absolutely correct, Joel.
So what do we got? Do we got? Do we want to do some ratings?
Yes,
we were going to talk ratings.
Yeah, I do want to do that. We have some interesting analyst commentary this morning. This one is not a ratings change, but it is analyst speculation on Apple. It's from Citigroup. I'm going to read you directly from their note this morning here. In April 2022, we also expect Apple to announce an incremental stock buyback of $80 to $90 billion after deploying $81 billion in the last 12 months. We also expect the company to raise its dividend by 5 to 10%. That's from Citigroup. Pure analyst speculation. The market not buying it yet.
What?
This morning. Oh wait, well no, that's
and what are they
buying everything.
Well, that's
they were buying it before the CPI number. Now they're buying everything.
Yeah. That's what I meant.
I don't know. What do you? I mean, good. More power to them if they predicted that. I have no idea. 169, not much. Got a little gap to fill here in Apple. 169.20 fills your gap from yesterday. Next daily high 171.78. I have absolutely no idea how they come up with that calculations.
I don't know. Another other interesting analyst note out today. You have an upgrade from Goldman Sachs on CrowdStrike, CRWD, to buy, giving it a price target of 285. That's probably your most notable upgrade of the day, I think.
Out of all the growth stuff that has just been murdered, this has not. This has held up very well. Cybersecurity story is so hot that it can keep these stocks elevated here. Goldman jumping on the bandwagon here. I mean, it's not surprising. It's up 12 points. You got, the market rallying. You got a Goldman upgrade to buy. And this story, people like the cybersecurity story here. So I don't know if I'm coming in chasing up $12, but on pullbacks here, this stock has worked.
And once again, trading 229 on the Goldman Goose, up 1240. I mean, this is just short term. This is not all-time high territory. But just folks, keep an eye on here. If you're trading this 232, 3 highs in a row: 31.50, 32.35, and 32.86. So if you're looking, for a shorter term target, boom, that's what I would look at for CrowdStrike.
Citigroup downgrading Cisco today to sell. That's probably your big downgrade of the day as well. Is CSC.
Stocks making new lows. You got to go. This is a tough chart. I mean, is it a value stock? Is it got a good dividend? It does have all those things. I think it actually gets interesting at 50 from a value perspective. But again, the stock is breaking down to a new, year, a new 2022 low. I don't buy stocks making new lows.
I've had this for a long time, so I'm not doing anything with it, especially based on this. I can't remember, maybe 16 or 17, 18. I don't even know when I had this thing from. So you did get a bounce off the pre-market low. Pre-market low comes in at 51.30. You got a ways to go to get. If you do get a rally up to 52.79, that would be another buck. Doesn't seem like you're going to do it today. That would fill the gap, but maybe a couple days after the dust settles. Like I didn't know what a RAD did, but look at that thing. Look at that. I know, Dennis, you're still bearish it. You still think it's going to zero, but Deutsche Bank.
What stock?
Right Aid.
RAD, these
yeah.
analyst ratings, they have an effect, and I wanted to check on the hood.
Well, what? You got a great selling opportunity. Yes, you came up, kissed that 8, filled the
Hood
gap
has news
almost.
today. Hood has news. They listed a bunch of new cryptos, including Shiba Inu, on the platform.
Oh wow, that's so bullish. And they're gonna.
Yeah, but this is a growthy name. This is stock will grab today. I think this is one that actually could move Hood here today. I mean, if the market stays up, this rate falls into the high growth stuff that they're buying right now. So, and it's pulled back significantly. I wouldn't be surprised to catch the bid.
All right, it is 9:01. This was a fun show, guys. We made it.
It was.
The world didn't end. Shout out to us
today.
Not yet.
Not yet. No, there's always tomorrow.
All right, go get them, guys. Triple D. I'll talk to you later on.
All right, as we wrap up the show, I want to remind you all that Benzinga has 2 upcoming events, the first of which is next week. If you're going to be in the greater Miami area, you may want to come check out the Benzinga Cannabis Capital Conference. We have our Psychedelics Day on Tuesday. The cannabis portion is going to be Wednesday and Thursday. Come hang out with people from Benzinga, Mike Tyson, movers and shakers in the cannabis industry, executives from Curaleaf, Cresco, Tilray, Canopy Growth will all be there. Link and code to buy a ticket is in the description. That's next week. And then a month from now, 4 weeks from now, is the FinTwit Summit in Vegas. I'll be there. Benzinga is co-sponsoring. The link to that is also in the description, as is a code for a ticket. Check that out, please, and thank you. How are we doing on the like front today? Let's check on likes. Oh, not nearly enough as I was hoping for. Can we get to 500 likes? That would make my day just a little bit better. Thanks to our guest today, Blu Putnam. As a reminder, if you want more of Blu, check out the link in the chat description or on the screen, or scan the QR code. That'll get you there. And thank you to all of you in our chat, all of our chats, people watching on YouTube, on Twitter, on Twitch, on Facebook, and yeah, even those of you watching on LinkedIn. Shout out our LinkedIn people. Smash the like, please. Subscribe to Benzinga. Check out Benzinga Pro, pro.benzinga.com. Free 2-week trial for everybody. It is the engine that makes this company go. All right, I am done now. We have to end this stream. Go on over to Live Trading with Benzinga. Money Mitch, Ryan Fluna, Zunaid will all be there live trading through the open, sharing you through their, walking you through their watch list, sharing with you stocks they're watching, and of course, talking about stocks that you want to talk about in the chat. That's coming up next. The stream will end and redirect over to those guys. So I will see you guys a little bit later. Have a great rest of your day. Good luck at the open, and go green. Stay safe.